Hey, welcome aboard. It's Walter here. Glad to have you here. Today we are going to talk about improving your trading and finding consistency. So this is a big deal for a lot of traders. I know. One of the things that I want to point out though about this is that it's not normal to learn how to trade successfully. Like profitable trading is not one of those things where it just all of a sudden, you roll out of bed and it works. The reason why that's the case, it turns out, is because we have what are called cognitive biases. Now, these cognitive biases, by the way, if you want to learn more about the cognitive biases and how they affect your trading, there's a course called Small Accounts, Big Profits, where we take a small trading account, we ramp it up over 300 trades, and you can get the information below this video or above this video if you want to learn more about that. So cognitive biases help us in everyday life with things that they're mental shortcuts, basically. So instead of having to process every situation that we come upon as new and as something that we need to crack the code to, we have these mental shortcuts and they serve us well. However, there are certain situations, and trading is definitely one of them, where we do not find them useful. And in fact, they're counterproductive and they lead to losing trading. So these are things like social proof, where you follow the crowd and, if the crowd's all making money buying Bitcoin, then I will too, sort of thing. There's lots of them. But the point is, and we can talk more about them in another video, but the point is that we're not built to make money from the get-go. And the way that you make money is by untraining yourself and unlearning these things. So trading's hard. It's not an easy thing to do. You probably read the story about Thomas Edison and how he was trying to figure out the right filament for the light bulb, and he went through thousands and thousands and thousands of them before he finally found one thing that would work in the light bulb. So he never gave up. And like a lot of things in life, actors are a good example of that. Most actors don't just get discovered and all of a sudden they're in a major movie, they have a major role. In fact, I have a friend. He's actually quite well known, or he's not well known, but he's been in a lot of movies you've seen. The interesting thing though is he's covered up. It's like he's always like got makeup on, or he's got a mask on or something. But he's been in all kinds of movies, from Pan's Labyrinth, which was highly acclaimed. You may have seen that one, a really good movie, to The Silver Surfer, to all these movies that Hellboy. He's in a lot of like comic book movies and things like that because he's covered up. He's always in his suit. But he had to start out as an extra, like most actors do, and they work their way up. It's persistent. And that's one of the things that you have to be as a trader. You have to be persistent. However, our persistence is usually placed in the wrong spot, unfortunately. What I mean by that is your broker knows that the system that you're trading right now, you're probably frustrated with. That's why. Have you ever wondered why your broker is always offering free courses and extra indicators and this and that? The reason why is they want to sell hope. And I know this is kind of a negative view, and I don't like to get this negative, but they know that a lot of their traders, most of their traders who come through are going to burn out, lose money, and they're going to need fresh blood. And the cheapest way for them to find fresh blood is to simply train you in another system. Now, this is something I talk about in the Naked Forex book. If you read my book, Naked Forex, I talk about the cycle of doom, and how the cycle of doom is this idea where you find a great system, you trade it for a little while, you get really excited, run into a losing streak, you lose some money, you're in a drawdown, give up hope, decide that the system's no good, it's despair, throw it away, and look for something better. And we end up in this cycle. I was in that cycle for over 4 years when I first started trading, from 2001 to 2005. More than 2005, actually, deep into 2005. So it was a long time where I was just throwing away systems, pulling up a new one, and so forth. So what I'm trying to get across here is that it's normal for you to struggle. However, here's the trick. Instead of throwing away your system or tweaking your system and trying to, quote, make it better, a better approach is to simply look at your numbers. What do I mean by your numbers? Is your average winner bigger than your average loser? That's a big one. You really want your average winner to be way bigger than your average loser. We know from Forex data, over 43 million trades at FXCM, that broker in the US and the UK. Most traders have a much bigger loser and a much smaller winner. So even though they win most of the time, they end up losing overall. So this is one thing to keep in mind is what does it look like in terms of your numbers? And the expectancy formula, we've talked about this in other videos. You can go back and see other videos. We talk about how to calculate this, but it's got to be positive. And so one of the easiest ways to improve that is to simply look at a more aggressive target that's going to bag bigger winners. That could be simply pushing your target out or using a trailing exit, some sort of way that you can capture those big winners when they do happen. The other thing to look at here is to try to be accountable. A lot of people don't know this, but traders that work at the banks and institutions, they often make a lot of money, obviously. I know several of them, and then they'll go off and trade for their own. But here's the dirty little secret. A lot of times it doesn't work out for them. The reason why it doesn't work out for them, they no longer have someone to be accountable. Once you're trading your own money or trading money, pooled money with some clients or friends or whatever, you no longer have that person above you, that risk manager who's making sure that you're doing the right thing and not taking on too much risk, or whatever the mistake may be. That's a typical one though. So if you're at a bank and you go over your number, whatever that number is, it could be you have 300 million at risk, or whatever it is. If you're over that number, your risk manager will call you into his office or her office, ask you what's going on, show you the numbers, and say, get back down under your number. The second time it happens, you no longer have a job. Now, we don't have that luxury as retail traders working for ourselves. So what you can do, though, is you can manufacture this by finding a trading accountability partner. That's somebody that you're going to report to every week, go over your trades, you go over their trades, and every week you know that this is going to happen. So, for example, if your problem is over trading, and you've set with your trading accountability partner that you're only going to trade 10 times a week, on Saturday you're going to be talking to your trading accountability partner, and you're going to have to justify why you took 12 trades this week, which is, I did the wrong thing. There is no justification if that's your rule. So this is another way. So that's number two. So number one is try and push out your reward risk ratio. Manufacture bigger reward trades. And it's okay if your win rate drops. Number two is create some accountability and sort of duplicate what happens in the institutions where they have a lot of accountability. Believe me, they will take somebody on who doesn't know how to make money, knowing that as long as they're diligent and conscientious and not going to go over their risk number, that they can teach them how to trade. They can teach them how to make money. So that's normal. That's as long as they can do the right thing, they're happy with those traders because they know that they can get them to the point where they're making money. And the last thing is really it comes down to persistence and belief. And it's kind of like being an actor. Like I said, my friend who for years and years and years, he was like teaching modeling classes. He's not even a model. Like he never was, never will be. He doesn't have that type of look. But he was teaching modeling classes because he didn't make enough money acting. Now he does. But it took him literally decades to get to that point. And so this is what I'm telling you is that if you play the game long enough, trading will work. You just have to stay in the game. The easiest way to stay in the game is to make sure that you're learning, that you're applying what you've learned to your trading, that you don't blow out your account and risk all of your money too quickly. Although that's a great lesson to learn, you still have to then build up another stake so that you can get back in the game again. If you trade long enough, it can work. It will work. I think the problem is people who trade for like 2 years and then go on to flipping real estate or what do you call that when they go and they buy those storage containers and then they sell the stuff in the storage container? I don't know what that's called, but like auctioning off storage stuff on eBay or whatever, or Craigslist or whatever they do. I don't know what that's called. But if you're always kind of looking for the next big thing, that's the problem. You have to really look at trading as a means to get to an end and set up a plan and say, okay, after 2 years, I want to be here. After 5 years, I want to be here, and so forth. in the small account, big profits course, that's exactly what we're going to do. We're going to set out our goals. We're going to set out our criteria. The goal, the hope, is that we can take $1,000 and ramp it up to $100,000 in about 300 trades. If you want more information, you can click the link above or below this video and get in on that. But that's what we're going to try and do. And we know that we need to be persistent. We know that we need to stay on top of the important things here, which is the psychology of a winner. See, people who win are resilient. People who give up and go on to the next thing, they're not resilient. That's really the key. If you can maintain your resiliency, you will live to trade another day. And then if you look at all the biographies of all those famous traders in the Market Wizards books or whatever, they all have one thing in common. They went through hard times and they came back out. A lot of times they went through at least 2 hard times and they came back out. And why did they come back out the other side? Because they're resilient. Resiliency is key, and it's going to be key to what we do in the small accounts, big profits course too. Being resilient through the hard times is really what enables you to get to the other end. So hopefully these 3 tips have helped you. And if you want to join us in the small accounts, big profits course, you can click the link below or above, and I'll see you there. I wish you happy trading, and we'll see you soon. Take care. Bye.